So as many of you that are following this banking issue probably deep down inside figured was the case, this rabbit hole is a lot deeper than it first appeared. So it turns out our friend Andrew Stupin, the first named defendant in the lawsuit filed by Zions Bank last week for $60 million that Stupin and other defendants left the bank holding in basically uncollectible debt. It turns out that Mr. Stupin, the story I'm going to share with you today, I just saw come out of Reuters a couple hours ago, actually has no less than $270 million of loans out there. All right? $60 million of it being to Zions, and Zions basically, confirming, let's say, that the debt will be uncollectible because they wrote off took a $50 million write-down in their earnings ending third quarter. So I'm going to share with you two stories, one from CNN Business that kind of lays the backstory, which we know, but why there's the concern is once the other banks start to get hit with the remaining $210 million of losses, I'm going to share with you, it's spread among numerous banks, okay? Not just one or two, with this same guy, right? You start to get banks questioning their underwriting, and they all start looking at their records. And then you start to have this snowball moment, all right? I think it's coming, okay? So before I jump into these stories, I always humbly ask, please subscribe to the channel if you're not subscribed so we can keep growing the community. And welcome to, all the new subscribers in the last, week or so. Appreciate you. So we know what I shared. If you watched yesterday's video, if you didn't go back and look at it, because I pulled, as I said here, the Zion Bank lawsuit, and I have gotten to the root of how this guy and his cohorts did this, all right? Either they had someone inside at these banks that was looking the other way, or they found a whole bunch of not just one, lax or negligent underwriting department, okay, or loan supervision department, but many, okay? And the way they did it with Zion's Bank is they did not record the assignment of the security interest in the underlying deeds of trust against the real properties, okay, which allowed Mr. Stupin and whoever else he was involved with to rehypothecate, retransfer, reassign, recollateralize those same assets for more and more debt. All right, so we have now, I'm going to share with you many banks. They're going to be exposed as holding the bag with $270 million of debt from Mr. Stupin alone. How about Gerald Marcel, who's named in this lawsuit? Okay, how about Deba Shyam, who's also named in this lawsuit? And anybody else and all their entities? How much more debt have they been able to go out to banks and obtain in their own names, right? It's going to become unfathomable how much is out there. I got comments on yesterday's video that I'm trying to stir up scare tactics. I'm making a bigger deal of it. A good friend of mine, basically one of my best friends I went to law school with yesterday, I asked him to check the Zion Bank news, and I was out in a meeting, and he said, this is a nothing burger, that $60 million is nothing, and there's nothing to see here. Okay, well, as of today, we're learning it's not $60 million. Okay, it's at least $270 million, and several banks, not just one or two, are involved in this now. As CNN Business, several financial groups are wrestling with bad loans, raising worries on Wall Street of more to come. For weeks, investors have focused on Jefferies Financial Group that has at least $45 million worth of exposure to First Brands, an auto parts supplier that filed for bankruptcy last month. Boy, that $45 million exposure by Jefferies is turning out to be a drop in the bucket, isn't it? On Thursday, says investors turned some of their attention to two regional banks, Western Alliance Bank Corp and Zions Bank, after concerns about some of their loans as well came under scrutiny. Okay, so the anxiety played out in the market at large last week. We've discussed that. It's all bringing back memories, it says, of the 2023 regional banking crisis. For now, it's unclear if there are risks to the broader market or if this is just a few bad eggs. And I'm going to share with you the story out of Reuters a couple hours ago. It's beyond that, okay? Investors seem more concerned about whether Jeffries missed warning signs in this case, which reportedly is being investigated by the Department of Justice for potential fraud, and if it missed similar signs elsewhere. Yesterday, I said the lack of oversight over several years by the Zions Bank loan department, not making sure as they were increasing Mr. Stupin's lines of credit from $10 million to $15 million to $20 million, $30 million, all the way up to $60 million on two different loans. They did not make sure that any of the 8 properties were, that the collateral had been secured, that the assignments had been recorded in the chains of title. So again, we go back to the concern about whether Jeffries missed warning signs. Okay, again, how do you not? In this case, I shared with you yesterday. JP Morgan, CEO said the other day, as we know, when you see one cockroach, there are probably more. And JP Morgan, it says, isn't actually clear either. It's poised to suffer a $170 million loss from soured loans to Tricolor, another company that went BK last month. Okay, so now let's jump forward to the Reuters article from today. Investor behind Zion's Western Alliance bad loans is tied to $270 million in troubled debt. Washington, New York. This is out of Reuters today. A little-known California real estate investor behind bad loans disclosed by Zions and Western Alliance also faces lawsuits by Banc of California and 2 other lenders with his involvement in troubled debt totaling $270 million, court filings now show. And now the banks have all lawyered up. And just like the lawsuit I showed you from Zions, they are all basically going after to chase the same pot of assets that these borrowers and guarantors have, if any, okay? In separate actions between April and August, Banc of California, Enterprise Bank and Trust, and Nano Bank sued the investor Andrew Stupin, seeking to collect on loans worth a combined $108 million. Very interesting. I don't remember seeing any news between April and August of these lawsuits because they probably weren't connected. So, we have Zions Bank, okay? We have First Alliance Bank. We have Bank of California, Enterprise Bank and Trust, and Nano Bank, okay? And this has been basically, let's say, at least out there as early as, or as late as April when these lawsuits first started getting filed against this guy. Stupin, a longtime California real estate investor, it says, who owns a high school football team, is listed as a guarantor on loans and is one of the defendants in those cases. PMF California REIT, a real estate investment firm, also sued Stupin and others to recover nearly $7 million, the filings show. An attorney for Stupin said the Western Alliance claims against his client were unfounded and misrepresented the facts. Right? Lawyers always say that. Enterprise, Nano, and Bank of California declined to comment. Jennifer Tullius, a lawyer representing PMF, said her client has no comment. The lawsuit shined new light on surprise disclosures last week at Zions and Western Alliance that spooked markets, with investors already on edge after the bankruptcies of U.S. auto parts supplier First Brands and car dealership Tricolor. The auto companies saddled big Wall Street names, right? And that was Jeffries, JP Morgan, with losses, okay? So it says, while shares rebounded, investors remain jittery. They fear that a searing rally in stocks driven by euphoria about AI has stretched valuations. Regional banks tend to, I left out one of the most important lines, which is that in such an environment, bad surprises and signs of trouble that are not fully understood can quickly snowball, analysts said. I share with you the scheme that these guys were using with regard to the Zion's Bank lines of credit. If you don't understand this stuff, and maybe even a lot of underwriters don't understand this stuff, it's very complex. And why certain documents needed to be done, to properly secure the debt. Look at, like I said yesterday, all these pages. There's like 300 and some odd pages of exhibits here. All the restatements of the loans, the guarantee agreements. None of it meant anything. I honed in on two exhibits. One was the demand from the lawyer, and one was the unrecorded assignment of the collateral interest. Everything else doesn't matter. They're all unsecured. They're contracts, okay? And contracts are only as good as the paper they're written on, okay? If you don't have a recorded tie to the underlying collateral. So, again, it's not fully understood. And that becomes the kind of the snowflake moment, okay? Or this canary in the coal mine, or let's say the black swan, whatever you want to call it, when there becomes this moment where banks start questioning all their internal practices, okay? And then the watershed moment or waterfall moment happens. Regional banks tend to lend in concentrated local geographies and typically have a higher exposure to commercial real estate compared with the country's largest lenders, it says. We wouldn't be surprised if more boards are asking bank management teams to scrub through their loan portfolios for similar issues, said Manan Kosalia, banking analyst at Morgan Stanley. So there we have it. That's just one of these guys. How about the other defendants on this list? And how about anybody else named in these lawsuits or went out and took on this kind of debt? And they were basically pledging, if you will, the same collateral. I guarantee that's what's going to turn out. They were pledging the same collateral for loans at various different institutions, selling the same shtick. But again, you have to have one common ingredient, okay? Ignorance, insider cooperation, or total lack of oversight, or maybe a combination of all of the above. Don't want to go too long today. Thank you guys for watching. If you enjoyed the content, leave me a like on the video. Please subscribe to the channel. I'd like to get your input, weigh in on this. Again, there's always a couple of people in the comments that say that I'm just talking in circles. This is real stuff. It's unfolding, hour by hour in this unfolding saga with the banks. It is not a nothing burger. All right. Thank you guys. Appreciate you. And with that being said, I do know that I understand that gold and silver got hit today. I've been watching this stuff. Doesn't faze me. I don't even look at it. Okay. My take is we've got short selling. We have paper price manipulation. Okay. It's bound to happen at some point. No, the fundamentals have not changed. Has anything changed? There's no news today that would support it. All right. It is basically manipulation. If you know what's going on, don't get rattled by it. Stay the course with it, with whatever your chosen, investment strategy is. Okay. Talk to you soon. Bye.